Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Country Garden Holdings Company Limited annual report. Country Garden Holdings Company Limited offers a diverse range of businesses and services. At its core, the company invests, develops, and constructs real estate properties in mainland China through its property development segment. In addition to property development, Country Garden also operates in technology-enabled construction, which utilizes innovative methods to construct buildings. The company's portfolio includes residential projects such as townhouses and condominiums, car parks, and retail shop spaces. Country Garden also ventures into the hospitality industry by developing, operating, and managing hotels. Furthermore, it engages in research and development of robots and related activities, providing a unique blend of technology and construction expertise. The company offers various services including property-related sales services, interior decoration activities, project management, and investment consulting services. These diverse offerings make Country Garden Holdings Company Limited a comprehensive player in the real estate and construction industry. Country Garden Holdings Company Limited maintains a market capitalization of $13 billion, broadly in line with the industry peer group. Country Garden Holdings Company Limited trades at a lower price-to-book ratio of -8.69 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 95% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified from various factors affecting a company's financial performance. On the one hand, revenue growth is driven by several key factors. Firstly, adjusting sales activities to respond to market changes can lead to increased revenue. Secondly, capturing new development opportunities in the PRC real estate market can also contribute to revenue growth. Finally, achieving budgeted sales volume through reasonable sales prices and supply plans can further boost revenue. On the other hand, revenue decline is primarily driven by several factors. Firstly, a decrease in total revenue of approximately 38.7% has significantly impacted the company's financial performance. Secondly, an increase in cost of sales, selling and marketing costs, and administrative expenses have also contributed to revenue decline. Furthermore, a decline in sales of properties, rendering of technology-enabled construction services, and others have also led to revenue decline. However, it is worth noting that there are some positive trends emerging. For instance, the completion of property deliveries has been completed, which can lead to increased revenue in the future. Additionally, the government policy framework driving market evolution towards a high-quality development model can also create opportunities for revenue growth. The company's financial performance indicates a lack of positive operating cash flow. According to the provided information, the operating cash flow is listed as negative on page 37. This suggests that the company is currently experiencing difficulties in generating sufficient cash from its core operations to meet its financial obligations. As a result, it appears that the company is not yet generating positive operating cash flow. The performance of various segments and regions in the company has been a mixed bag. On the positive side, property development has shown strong results, with no specific details provided on its performance. However, other segments have struggled. In particular, technology-enabled construction and the overall technology segment have underperformed, despite an increase in revenue from external customers. The others segment also saw a slight increase in revenue, but still reported negative results. Furthermore, property development has seen significant decreases of 38.8%, and technology-enabled construction has experienced an even more substantial decline of 45.8%. These numbers indicate that certain areas require attention to improve overall performance. Management is optimistic about the company's outlook despite the industry shift towards high-quality development. They see this change as both a challenge and an opportunity for growth. To navigate this transition, the company plans to leverage new technologies plus AI to drive innovation and enter a path of sound development. The company is committed to building its future-based core competitiveness in key areas such as quality real estate and intelligent construction. This strategic focus will enable the company to stay ahead of the curve and meet the evolving needs of customers. With determination, management is forging ahead to live up to expectations and capitalize on the opportunities presented by this industry shift. The company's financial strategy has been focused on retaining earnings rather than distributing them to shareholders. According to the provided information, one key aspect of this strategy is that the company has chosen not to pay dividends to its investors. This decision suggests that management believes it is more beneficial for the company to reinvest its profits in growth initiatives and other business opportunities, rather than providing a return on investment to shareholders through dividend payments. And that concludes the financial summary for Country Garden Holdings Company Limited. Feel free to comment below, and I will be happy to answer them when possible.